Hi there, welcome to Grain TV. It's Monday, April 4th. It was a mixed day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was up a half a cent. Beans was the leader to the downside, losing 4 3/4, and wheat in Chicago off one after being off as much as 5 cents throughout the trading session. News today was pretty light for a Monday. We did have some activity in the export business overnight, with South Korea being an active buyer of corn. They bought 192,000 metric tons combined from 3 different companies in South Korea. Those corn supplies will come either from the U.S. or South America, so coming in at optional origin. Likewise, the largest feed manufacturer in South Korea late Friday announced that they had purchased also optional origin corn to the tune of 272,000 metric tons. So the big price drop that we witnessed as of USDA's report on March 31st has at least got some feed buyers looking to source some corn. In other news, over the weekend, the rain models continue to show favorable conditions for the plains getting into that week of April 10th through the 15th. We saw those forecasts starting to materialize last week, and they are starting to reaffirm themselves this week. Last week, as we closed the week, we saw about a 20 to 30% precipitation chance in that April 10th, April 15th window for the western part of Kansas. Today, those precipitation forecasts are higher now, getting as high as 60% in that April 10th to April 15th window, suggesting that there is a better chance for rains in that drought-stricken western part of the plains. Other news out today, export inspections came out, and corn came in on the high side of expectations, beating analyst expectations with 1.05 million metric tons. That's going to be well needed because we've been well behind pace for most of the season, and getting closer towards the end of the season, we're going to need some aggressive exports to catch up to USDA's pace. In soybeans, exports were a paltry 204,000 metric tons, well below expectations that range from 300 to 500,000 metric tons, and wheat coming in right in the middle at 318,000 versus analysts that had expected 275 to 450. As we look at export inspections year to date and compare them to last year, and we also compare that to what USDA is saying we will do this year versus last year, we can see just how bad it is in corn. Now, 2 things have happened. One, our corn business has gotten a little bit better of late. Secondly, over the season, USDA has continually ratcheted down their export forecast. We're now at 1.65 billion bushels expected to be exported for the year. Right now, we are 16% behind last year's pace, and USDA is expecting an 11% drop over last year. So you can see we still got pretty wide margin there to make room on, or to catch up on, as we get into the latter half of this marketing season. In soybeans, we are just slightly ahead of where we need to be. We're only 7% off of last year versus USDA, which is calling for an 8% drop over last year. And wheat, slightly worse, with a 12% behind last year's pace versus USDA looking for an 11% drop. Now, one thing that's going to be important for us, or is beneficial for us in the U.S., is the weakening currency situation, especially the U.S. dollar that has gone down in the last 2 months. We're off about 5% from the highs back at the start of the year. That's going to present a much better picture for us in the export arena in the next 6 months than it has in the previous 6 months. The other thing is the continued strength in the Brazilian real. We didn't see much movement in the real today, but it still holds an impressive gain over the last month, which is making Brazilian beans that much more expensive relative to the U.S. Speaking of beans, let's take a look at the daily chart. We had a really strong day, or at least on Sunday, we started the session really strong coming into the night session on Sunday. We got up into that 922, 923 range, but pretty much for the rest of the evening into early morning, we faded lower, and we closed lower, losing about 4 cents on the day, closing around 913 and a half. Now, that's going to be pivotal because that's sort of going to turn into support here, because that was a recent high. So look for that that 913, 910 area as sort of critical support. Can we hold that in light of this recent rally? We've obviously had a big run up since March 1st, and so it'll be interesting to see whether we can hold it. If you're a grain hedge client, then you know that we've been sending out our technical alerts, and this morning we forewarned of this potential move. When the market was trading around 921, we predicted the market would potentially move down into the 910 area. We didn't make it there today, but we did close at 913. So technical alerts are a useful objective tool to help you in your grain marketing decisions. If you're not a client and want to see how these tools can benefit you, then visit us online at grainhedge.com and sign up for a free trial of our trading platform and our services. That's all we got for today on Grain TV. We'll see you tomorrow. Grain Hedge is pleased to announce a new tool called Technical Alerts. Technical Alerts is free to our trading clients and delivered by email first thing in the morning every trading day. Technical Alerts is a powerful, easy-to-use system that provides quality trading opportunities. Each trading opportunity shows a chart and analysis, providing clear price targets and risk potential to allow you to make an educated trading decision. The commodities covered include grains, livestock, crude oil, currencies, bonds, and metals. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. Let's take a look at how to interpret a technical alert. At the top, you will see a red or green indicator arrow which signifies the market's likely move. Red shows when weaker prices are expected, and green for when higher prices are expected. The summary section shows the expected price target and the expected duration it should take to reach the target. Also, Technical Alerts provides both support and resistance to help you identify key levels on the price chart. Underlying support is where technicians believe there is a level of buying interest, while overhead resistance is the price level thought to trigger more active selling. The support is marked with the letter A on the corresponding price chart, and resistance is marked with the letter B. Below the chart, you will see the data interval of the bars. For example, a 1-hour data interval means the chart pattern was constructed from a 1-hour bar chart. And when you are using the Grain Hedge trading platform, you can use the pull down on your chart to change the bar interval to the appropriate time period. As always, we strive to provide you the best tools to improve your trading and hedging activity. If you have any questions on how to use technical alerts, please contact us at 877-472-4607 or by email at support@grainhedge.com.